All right, welcome to our October supply and demand report. And this is Brian Hoops for Midwest Market Solutions. Uh, Making sure everyone can hear me and see the screen and everything properly. If there is a message board there, you can type a message. We can communicate that way. Otherwise, you're not going to be able to talk with me directly. So this should be working, and should see on your screen some market info, company info, services we provide about our company, and getting told that I sound good. So I think we're going to go ahead and record this meeting. It's going to last about 30 minutes. We're going to go through the supply and demand report and kind of talk about what's happening with the markets. Now, at the end, we are going to give some marketing ideas. And I know there's a lot of people who are trying to get field work done. This is maybe not the most convenient time for everyone. In fact, there's not a perfect time for everyone. So we record this webinar, and I know a lot of people will be joining us at their own convenience on demand. And you can find this webinar. It will be posted at our website under the Market Insider TV link under webinar. And we have daily video commentaries on our website. We have our RFD TV appearances on our website, and you can watch our monthly webinars as well. So a lot of things that I feel we have to offer. We're going to look at the summary of the report here, and as I said, it's going to take about 30 minutes. If you have questions, comments, you're joining us live, you can type them in the chat room, and we'll try and get them answered for you. If you're watching this on demand at a later date, and you have some questions, we have 8 offices around the Midwest, 6 different states: Yankton, South Dakota, Pocahontas, Iowa, Storm Lake, Iowa, Springfield, Nebraska, Springfield, Missouri, Verona, North Dakota, and 2 offices in Minnesota, Thief River Falls and Roseville, Minnesota. So contact any of our offices there. They'd be glad to assist you, and hope we can help you out. Now let's look at what the USDA had to say today, or yesterday. Actually, it's Thursday, October the 12th is when they reported this. The trade reaction was somewhat friendly, but the report itself is not a bullish number. You look at the production number, 14.2 billion bushels of corn. That was achieved by having a yield of 171.8 bushels per acre. That was well above the trade guess and well above last month. So we've kind of set the wheels in motion here for a big crop to get even bigger once we get into November, and then the final report in January. Last year, we had, of course, the bin buster crop. We planted a lot less acres this year compared to a year ago. So we're not going to threaten the overall production number, but the yield is a big one here. So 171.8 bushels per acre is a big number, the second largest in history. The crop last year was 174.6, so we're still 3 bushels, nearly 3 bushels an acre smaller than a year ago, and I doubt that we're going to threaten that type of number. But one thing I think this year is going to teach us is we've had some real adverse growing situations this year, tough getting things planned in the spring, then a very hot and dry month of June where we hardly got any rainfall at all, and then a very wet August. Is that the genetics of our seed is vastly improved to what it was 10 years ago, and that is going to make sustained rallies in the summer because of adverse weather very difficult going forward as the trade mentality kind of shifts to bigger and better genetics. Okay, so soybeans, 4.431 billion bushels of production. That's breaking last year's crop. We've got a lot of acres planted this year, and a yield not as good as last year, second largest ever, 49.5 bushels per acre. That's actually less than the trade guess and less than what last month's number was, and a little bit of surprise to the trade. I know a lot of people, myself included, thought the rains in August would give us boost in soybean yields and not in corn so much, but it's been the opposite. The USDA says soybean yields increasing, or excuse me, soybeans decreasing, corn increasing, kind of opposite of what a lot of people expected. And then we look at our ending stocks, how this all impacts all this production number and what our total ending stocks are projected to be. The corn number, 2.34 billion bushels, slightly above last month, and look at above last year, 2.295 billion bushels, so much above last year's number. And soybeans also above last year, 430 million, down from last month, and that's what gave us the rally that we have seen in the last couple of days. Wheat, 960 million bushels, down from last year, but up from last month. And wheat is really, best case scenario, a follower here of corn and soybeans. One thing I think is real important to look at is world ending stocks. You look at the corn number from last year, you've got 201 million bushels of stocks, and last year 227. So we had a huge drawdown in world ending stocks, and more so than what is going on in the U.S., what's going on in China is going to be a key component. We had a webinar last month that talked about how bullish this would be as China improves its ethanol demand, and this would be bullish for corn longer term. This week there was a Newswire report about exactly that. China is not going to have as big a corn crop as what they have had previously, and they are going to turn towards more ethanol usage, and that will increase their demand for corn. So big drawdown in world stocks for corn. Soybeans, not necessarily the same. In fact, it's the opposite of wheat, 268 million tons of world stocks for wheat this month compared to a year ago, 257. So the wheat direction here is going in an opposite direction. Supplies are increasing on a worldwide basis. All right, let's look at some of the highlights for corn, and we won't go through all these changes, but some of the highlights here. Corn yields increased by nearly 2 bushels per acre, and we talked about that. This yield number, second largest in history of all time. Corn yields have advanced in 11 out of the last 16 years, so there's pretty good odds that yields from now to the final will continue to increase, similar to what they did last year. Now, our ending stocks, thankfully, only increased 5 million bushels. We had a production increase of about almost 100 million, but because of stronger demand trends and less beginning stocks due to our quarterly stocks report, our ending stocks were virtually unchanged from last month. World stocks, we talked about that, how much of a drawdown that was on a worldwide basis. One thing we've talked about since we've been doing these webinars is each time we do a webinar each month, we talk about the weather cycle, and this has been very accurate all summer long. The pattern we get into is very close. Last webinar we had in September, we said that the cycle would change on or about September 26th, and it would become cool and wet. And if you're trying to combine, you know it is wet out there. Trying to get harvesting done has been a real challenge this year. It's cool, it's very wet. Now this will change again, but not until November the 6th. So by the time we have our next supply and demand report, we will have changed the cycle again, and it's going to be more geared towards a little drier and a little bit warmer pattern starting in November. But for the next several weeks, we're going to be wet and cool, which will hamper harvest activity for corn. Here's a chart of U.S. corn ending stocks just to kind of put it in perspective. Sometimes we see the numbers, but we don't have a perspective. Here on this side is the ending stocks in millions of bushels. You can see this year, the 2017-18 projection, nearly 2.4 billion bushels of ending stocks is going to eclipse any time going back until 1988-89. We have to go back into the pick years in the early 80s to see ending stocks larger than this year. So what it tells us is, similar to last year, we have a mountain of corn that's available. And we talk at our company, we talk with producers every day. And a lot of marketing strategies have not changed. A lot of bins have been built in the last 10 years, a massive amount of on-farm storage, and a lot of crop this year is going to be stored on farms and placed in the storage until we get better pricing opportunities. And this year, they never really materialized. We had a tough time getting much in the way of corn opportunities, and with stocks this large, it's hard to imagine, outside of some weather issues or something such as a country such as China that wants to be aggressive buyers of corn, of a meaningful rally. So corn is going to continue to struggle here, in my opinion, through the winter months, and on rallies, we're going to have a real tough time trying to rally this corn market. Let's look at soybean highlights. And again, if I go too fast, miss anything, please put a message in there in chat box and let me know. Production decreased by almost half a bushel per acre. This yield is still the second largest in history, trailing last year. Um, this would be the first September to October decline in 5 years. Forget my typo there. This is the first time September to October yields have been on the decline in the last 5. Another half a bushel per acre cut would trim stocks below 400 million. Right now we're at 430. So it's still a large number. We're going to look at a chart reflecting how large it actually is, but there is signs that we may start to cut into some of these stocks. Now, usage is also 120 million bushels more than a year ago. You can see our total usage numbers right here. This 423.26 is our usage. Last year's usage at this time, 4.214 billion bushels. So we are increasing our usage. We're using more and more soybeans. South American weather, just starting off, weather is mostly favorable. There is some hot temperatures in parts of the country, and if we get hot and dry, prices appreciation likely to accelerate. Remember, just about 2-3 years ago, prices really rallied over $3 because of poor weather in South America, not because of what job was done with supply and demand rationing. Funds want to be long in the fourth quarter. I have this here. I want to highlight that. This is something that a lot of people forget. When we started doing these webinars, we talked about how the funds want to be short during the third quarter of the year, and they reposition to be long into the fourth quarter. And that's the situation we're in, is they're trying to buy back in and get themselves long in the fourth quarter of this marketing year. And I think that trend is likely to continue into the end of the year. Let's look at our U.S. soybean ending stocks and put this in perspective. Over here on the left side of the screen, it tells us our stocks on a year-to-year basis. The biggest number we had was 06 and 07, over 550 million bushels. This year, projected number was 475. We dropped it down to about 430, so it's going to be a little bit less than 05 and 06, but certainly much larger than a year ago, 300 million bushels, and nowhere close to what we were back in this time frame here in 12, 13, 14, 15, when stocks were under 200 million. Now, I did mention earlier that we could possibly drop ending stocks to below 400 million bushels, and if that's the case, this number right here is 400 million. It doesn't really change things that significantly. There's 3 years we've been above 400 million, and one of them looks to be this year. Even if we drop it to 350, that still would be the fourth largest or third largest ending stocks we've ever had in our history. So it's not very often we have our soybean stocks even above 350 million bushels. Anything above it, it would be considered a huge, huge number. We want to talk about wheat a little bit. There wasn't a lot of changes to the wheat comments. USDA increased hard red spring carryover by just 16 million bushels, hard red wheat carryover by 24 million, and decreased soft red wheat carryover by 840 million. I left these numbers here as this was at a previous webinar that we had done talking about these ending stocks. So actually hard red spring wheat ending stocks have increased by 20 million since this summer. Hard red winter have increased by nearly 40 million since this summer, and soft red winter is almost 30 million larger than it was this summer. So our carryover stocks are increasing, and this comes at a time when we don't need stocks to increase. We need them to decrease to see prices appreciate. The fact that stocks are increasing suggests that any crop that's in storage, we need to sell the carry, because in big stock years or increasing stock years like we're seeing this year, that carry is rarely met by the trade. So our winter wheat is off to a good start. We have very good soil moisture profiles, and really not a lot of concerns in the month of October about how our winter wheat crop is doing. Normally we'll see those concerns develop in the spring, but at least to start off our fall planting season, the crop is going in very good shape and very good conditions. Finally, here's a chart of our world wheat stocks. And again, here's the problem we have with U.S. wheat prices. Starting back here in 2012 and 13, we've got a trend of increasing world stocks, same thing when U.S. stocks, our world stocks are steadily increasing, and that is a real problem for world wheat prices. So, wheat is grown and consumed on a worldwide basis as a food grade, and so the higher quality, you'll get better export business. But right now there's so much competition out there on a worldwide basis. We're going to have a very difficult time competing with that. And the message that I think the price markets need to send here is to not plant as much wheat, not only in the US, but also globally. So I don't look for wheat prices to have much upward mobility or appreciation into the winter months, into the spring months. And really the only reason we had marketing last year was a drought conditions that lasted about 6 weeks in the Dakotas and in Montana. All right, let's look at our marketing strategies here, and we'll wrap up our webinar. Funds currently are net short. Now they'll build their longs in the fourth quarter. Friday afternoon, depends on when you listen to this, the Commitment Traders report will come out, and we analyze the report in our weekly newsletter that comes out each Sunday night. We take a look at what's going on in the Commitment Traders report, and we do expect we're going to see the funds buying in corn, beans, and wheat as they'll build some long positions here in the fourth quarter. From a producer standpoint, we think it's best to sell into rallies here and sell the carry before the end of the year. What that means is if you look out at a chart of corn, for example, we're at, I would say, full carry. July corn's at 382, December corn's at 352. That 30 cents represents maximum carrying charges to hold that crop into December. It's unlikely that 30-cent premium will be there. So if you have December hedges, it would be advised to roll them to July and deliver in July, because there's a 30-cent gain to be had. If you're storing crop, sell into this carry and sell for July delivery. Use that storage and sell that carry and make that work for you. Now, last year, beans did have a post-harvest rally of about $1.10, and corn a 40-cent rally last year. Now, this comes at a time when ending stocks are actually smaller than what we have for corn and beans this year. So I'm going to flip to a chart here, and we're going to look at soybeans. If we go from $1.10 off of this 922 low, we're looking at right up into this 1030 area, 1025 to 1030. That's going to be about the similar price level we had last year for the entire year. So I'm looking at, as we get into this 1020 all the way up into 1050 range, I think this is the spot we want to be selling into going into the winter months, is anywhere from this 1020 to 1050. We go back to the summer in July when we thought we were going to have a much worse crop than what we are harvesting right now. This was a price level that stopped a rally. I got a feeling that we get up in this area, we're going to stall rallies out in the soybean market. But this would be your point, similar to last year, from $1.10 a bushel, from 920 to 1030, 1040. I think this is your area where you want to target sales. And if we look at corn, we're sitting here. In fact, we just made contract lows Thursday prior to the report. Now, if we do a 40-cent rally from this 344 area, we're going up to 384. So, you're going to see somewhere up in here as probably your objective. And there's all kinds of resistance here between 380 all the way up to 390. This would seem like a place that corn market is maybe going to try and gravitate towards as we go into the end of the year and into January. So I think if we are able to finish out the soybean rally, get a corn rally up in this 375, 380, 390 area, certainly would warrant some sales being made in those markets. Big supply years, that carry rarely ever gets met. And if you want to be bullish to this corn market, I think there's better ways to manage your risk by using options here. If you do make sales and you do maybe you get 100% sold out of the corn market, for example, you get a 30-40 cent rally, you sell all your corn, you've sold the carry in the market, and you go ahead and make your sales. Look at some option spreads. Right now, these options are very cheap. You can buy a 390 July corn call today and sell a March 380 for 10 cents, just a dime. You can do a bean call strategy, same thing. July 1060 calls, March, you're selling the March 1060 calls for 14. This strategy, let me explain this real quickly. When you buy a call, you're buying the July 390 strike price. You're selling the March 380 for 10 cents. With these big supplies of crop that we have, it's unlikely we're going to have a rally above 380, 390 area for March corn. We're sitting at 366 right now. If we get a 15-cent rally, maybe a 25-cent rally to 390, that option likely will expire worthless, and then you'll be left with a 390 call that you own, and you can own that all the way through the growing season when our best opportunity for a rally would be available. During the winter months, we're likely to see appreciation here through the winter on fund buying, but to get a major rally, I think you're going to have some weather issues. And if you are long a July 390 call or a July 1060 bean call, that would give you some opportunity after these March options expire in February. So I think this is a good strategy if you want to make some sales. And you want to wait, maybe you want to wait for a 30-cent rally in corn, readjust your strike prices, make your sales then, and we can help you with those strategies. Any of our agents are be glad to assist you. If you're storing wheat, I don't know that there's a reason to own wheat calls here. If you're storing wheat, why don't you sell these calls against stored bushels? In the stock market, this is called writing a covered call, where you own a stock and you sell a call option above it in case prices ever rally. You're covered with the futures or the stock against the short call. If they don't rally, you get to keep the call premium. So in this case, if you're storing wheat and you want to sell, if it gets to 390, May Kansas City wheat on the close today is 468. So if your plan is to sell 20-cent rally in this May Kansas City wheat, if we get there, so go ahead and sell a call for 15 cents. That way, if we don't get there, you get to pick up an extra 15 cents of marketing, and that goes into your pocket. If we go to 490, you go ahead and make your cash sale, buy this call back, pay a small loss on that. Don't pay for commercial storage. This probably goes without saying that this year, similar to last year or to any year, you could lose a lot of money by trying to store a crop commercially. We've had clients in Illinois tell us that their storage rates have gone from 25 cents to 65 cents, and that's just to store the crop through the rest of this marketing year till 2017, our calendar year. They are going to be charged 65 cents a bushel because there is such a backlog of soybeans, and for corn for that matter, waiting to be marketed and sold. Their pipelines are full. They don't want it, and they are telling you now to go ahead and make these sales. So don't pay for commercial storage. You're better off making a cash sale now and using one of these option strategies as a reownership strategy. Or if you have any other questions, contact any of our offices. Once again, we have 8 offices now, 6 different states around the Midwest. You can find all their numbers at our website, MidwestMarketSolutions.com. This has been Brian Hoops. Thank you for your attention today, and we hope this brief look at the supply and demand report helps you out. We enjoy talking with any clients around the Midwest, and if you'd like to become one today, contact any of our offices or go online to our website, MidwestMarketSolutions.com. Have a great weekend, everybody, till I talk to you again.